Monday, December 23rd. Quick bonus video for you wonderful ladies and gentlemen, filming this late at night. Given the holiday shortened week, market is closed on Wednesday, and on Tuesday it closes at 1 p.m. Futures trade till 1:15. I would imagine that the rest of the week is going to be fairly light volume. VIX had a look above and fail of the 2376 area. We should pull back down to the 14s and maybe even dip into the 13s. With regard to futures, we did have the contract roll from Z to H. We do have a potential inverted head and shoulders here on both sets of futures. I think the bulls, if they can hold that 6,005 to 6,000-ish area now, are okay. The bulls do need to clear the 60, 50, 75 zone though. If you notice what the VWAP was from the Fed day, it's 60.53.5. So we're right in line there with today's neckline and the Fed day VWAP. So if we clear that, we really could run. Generally today, the bulls were able to hold the 100 MA 30-minute. The 200 MA 30-minute had been some resistance in the RTH session, but we are trading above that in the overnight. Obviously, it matters more in the RTH than it does in the overnight, so we'll have to see if that can carry over into the RTH session tomorrow and for the rest of the week. If the inverted head and shoulders play out to their logical conclusion to the upside, the 2 times range is 62.35.5 and the 2.618 is 63.49.75. In the Qs, the 2 times range is 22,617.5. The 2.618 is 23,115.25. Obviously, these would both be negated if we were to take out the right shoulder lows, which were today's low of days. In the ES, that's 59.65, and in the Qs, that's 21,476.75. With regard to SPY, we did have a little bit of a look below and fail at the 586.12 breakout zone. We were stalling below the channel on Friday, but today we got back up over it. I think it's very simple here. The bulls just need to hold the 50 MA at 591.65. If they can continue to stay over there, we could rally up to the 20 MA at 601.10. I do expect that 600-ish area to pose some resistance on the way up now, but very possible we do get there, likely even. With regard to the Qs, similar setup here. We are still over the 20 MA in the Qs. We never fully got articulation down to the 50 MA. Bulls there need to clear the 10 MA at 525.37, and I would say need to hold candle body low from today at 522.87. On the upside, we could even target back up to the reference highs at 539, but do need to hold the 20 MA, and if that can't hold and for some reason we lose low of day here at 516.13, I do think we'll likely come down to the 501s to 504s. TLT not really helping out the bulls all that much. We're still hanging out around those 87.51 lows. If there is another leg lower, we could get down to the 85s, which obviously would be a big jump in interest rates. Bulls do need to hold right here. I think if you want to put a buy stop up over the high of day at 88.23, that makes some sense. If you're short, that's a good stop as well. We could check back easily to the 89.55 to 89.82 area, which were reference lows from back on 11.6 and 7.1. Dollar has been a thorn in the side of the bulls, and they're still over 108.071. Anything above there to me can still run. I don't think the dollar bears are in any good situation here until they break at least the 10 MA, currently 107.504 and rising. The Bitcoin has been pulling back some here. We were cautious once it snapped the 20-day moving average, which had been support, so I do think that that 20 MA, 10 MA could be some resistance now at 98,835 to 100,128. On the downside, the trend line is just below the 100 MA. The key supports were right on one here at 94,640. The next one is 90,785. After that, it's 85,890. And the 50 MA lines up a little bit above there. If we did the full Monty down to the trend line tomorrow, it would be 84,465. It's currently that and rising. I do think another plunge in Bitcoin could offer up an opportunity to buy the dip. MicroStrategies, I've mentioned before, is a levered way of playing the Bitcoin. I prefer to just outright play Bitcoin. The 50 MA was the key support here on the prior session. If we can't hold that 320.12 area, there could be a still further liquidation break to fill in the 11.8 gap to 270.42. That 267.89 to 270.42 is a breakout range, so that is a must hold and a right or right out by the dip. Gold has been hanging in there, but just barely. That 240.64 lines up at the 100 MA. That area does need to hold. I could see there being some resistance at 243.98, which is the 20 MA, and the 50 MA at 246.42. Generally here, though, they need the dollar to kind of cool out, but it hasn't. Apple has remained strong. We had talked about that negating that bearish pattern, the head and shoulders that Carter Worth said he thought he saw, and I said I didn't. With regard to the levels on the upside, we tagged out the 255.27. We're getting close to the 261.06, and I think the top out here could be at 266.26. If we do some kind of an outside move, 275.63 is a 2.618 on a bit of a larger time frame, but I do think that the 255s are a good trim, 261s, 266s, and if we do make it to the 275, probably a good opportunity to sell out of the position. I'd be careful now if the 10 MA couldn't hold on pullbacks at 250 quarter, generally 250. NVDA acting fairly well. They actually got bought after the Micron beatdown. I think as long as it holds the 20 MA on dips now, which is currently 136.96, it's fine. Anything below there to me could see still further liquidation break. Bulls are right up on it though here. The 50 MA is 139.72, and there is a resistance band between 146.76 and 144.42. That of course being the 620 old high, and the most referenced kind of range high that we used from 1022 was the 144.42. NVIDIA is starting to look a bit better here. Micron still kind of sucking wind, bear flagging here, but as long as it's above 84.12, it's fine. Below there could be another leg down, maybe even a move to the 75-ish area, which is the anchor VWAP. Google's still acting pretty well. They have the quantum computing, and they just launched their new Gemini app, which I think is actually pretty good. I think as long as we're over 191.75, it's still higher. If we lost low of day now at 190.15, there is the risk of the pullback to the 182.22. On the upside, the fib extension is 204.67, but it wouldn't surprise me to see this continue to beast on up. It does have a decently low PE multiple, and they do generate a lot of cash. Meta bouncing, it did hold the 50 MA, so guess what? That is the must hold. We've talked about when it trades below the 50 MA and back through it. It's a long, happened again. I think the bulls now need to clear the 20 MA at 603.67, which is a good trim here, by the way. Back below the 50 MA at 586.18, I do think could pull back to the 100 MA, 561.82 and rising. If we can clear the 20 MA, we probably get a retest of the 10 MA at 612.42, and then it'll have to hold 600 to 602.95. That is a must clear and hold for still higher prices. Tesla has been pretty boss lately, although it has been pulling back a little. It's fine in my view as long as it can hold the 2 times range at 403.20 down to about 400-ish. The 20 MA is almost at that 400-ish area at 396.02. If there were a larger pullback and we got the top side of the old green channel down around 344.32-ish, and if it lined up with the 50 MA, currently 324.83 and rising, I would be a buy the dipper down there. Basically, we got the 2 times range at the 484.90, so we should quote-unquote pull back to the 403.20. It hasn't yet, and that shows me that there's still a lot of buyers and strength in Tesla. Generally speaking, we do have a holiday shortened week. Options premium decay is going to accelerate exponentially after tomorrow. Obviously, Wednesday is off, and then Thursday and Friday are going to be light volume days. They may not be if there's some news, but my guess is they will be, and then we'll reconvene and start getting things going back in January. Generally, January tends to be a bullish month. It's allocations. Sometimes we'll see a strong January and a sell-off in February, or sometimes we'll just see it strong through March for the whole Q1. I do think that if we do have a big up move in January, it's a good opportunity to lock in some gains, particularly in stuff that's up a lot. So if you want to sell some upside calls to generate some alpha, I'm good with that. I still think VIX is pretty low here, and it seemingly is coming still lower to put on some put spread premium for Q1 longs. Like and follow for more.